Good day, everybody. Welcome to the Santa Clarita Market Update. Today's the 21st of September, 2025. Good morning, good afternoon, or good evening, whenever you're watching this. I do want to give you the inventory numbers and talk a little bit about what's happening. So in the last 7 months, since February of 2025, the Santa Clarita Valley has not seen these as low real estate numbers as we're seeing now in the residential sector. This is going to be condominiums, single family residences, and townhomes. We're down to 713 active units. Track back just a couple months, we were well over 800. So we have a 7 month low of real estate inventory. But because the market's slowing down, potentially that's not going to harm prices. In fact, we might see some increases in particular sectors, depending on what kind of buyer drive that particular property happens to actually attract. Because in some areas in Valencia, Stevenson Ranch, of course, because inventory in both those areas are quite low. Also, Canyon Country, Castaic, Newhall, and Saugus. All of those have particular areas that are really attractive to people. And even those with school aged kids, they still want to get into those areas. So even though their kids might be back in school, they're willing to bite the bullet, make the sacrifice, and move even during the season where it's going to be more uncomfortable for them because now they have to work on school placement versus doing it during the summer, which might tend to be a little bit easier. But that being said, the Fed did meet last week. The interest rate reduction on the Fed funds rate, which is different than the mortgage rate. There is maybe a little bit of trickle down effect on that, but the mortgage rates are based on the 10-year bond. So the more confidence there is in the 10-year bond, more people are buying up the 10-year bond, then mortgage rates typically adjust lower, and more people that are selling them off. They don't have a lot of faith in that particular bond. Then, of course, the mortgage rates go high. They preemptively lowered those rates in expectation of the Fed fund meeting, and they did reduce that rate, the Fed funds rate. This is the rate that the bank trades money back and forth. 25 basis points. That translates to 1/4% or 1/4 of 1% or 0.25%. So 25 and then 50 is half, of course. So that's what that reduction was. I believe that they're going to be meeting 2 more times this year, so there could be a bigger chance. But again, it's really more dependent on that 10-year bond. So we'll have to see where that gets us here in the future. That being said, because they did adjust that rate, it seems like inflation's somewhat under control now. Unemployment numbers are a little bit weird, but I do believe that real estate could very much hold its value, especially here in Santa Clarita Valley, and maybe increase, like I said, in some sectors. We definitely have a supply and demand issue where we don't have a lot of supply and a pretty high demand. I'm Connor with Honor. I will be 10-8 until the next one. We'll see you. Thank you so much for watching. Be well.